RWorld, and welcome back to RWorldTalk. We've got some really good information for y'all today. We just had our Tower Club real estate luncheon, and in case you were not able to go because we sold out right away, I happen to bring our guests right here on the podcast. So we are lucky enough to have Trey Goldman here as well as Cyndee Haydon. Trey works with Florida Realtors as legislative counsel. He is their chief lobbyist extraordinaire. And Cyndee Haydon is an associate broker at Future Home Realty up in the Tampa area. She is the NAR Insurance Chair as well as the Women's Council RPAC Ambassador for Florida. So, welcome.
Welcome. Thank you.
So good to have you guys here.
Yeah.
What in the world is going on with insurance, Trey? We're going to do, I feel like we're going to have good cop, bad cop, because everybody's going to be upset with Trey by the time we're done, but they're going to be happy that Cyndee could break it down to a fifth grade level and let us know what it is that we could do to possibly help our homeowners. So Trey, we'll start with you. What the hell's going on with insurance?
Okay. So first I'd say, what kind of loaded question is that? We are the number one hurricane risk in the world, right? The world is heating up.
Yep.
And I've told people before, 40,000 feet, we're a sandbar. And today I was flying down from Atlanta, right? Atlanta to here.
Yep.
We flew down the west coast of Florida to land on the east coast of Florida, right? So these are things we can't control, right? So we have a weather issue, but insurance companies can model for storm. They cannot model for litigation.
Okay.
And that's what we've had the last number of years. And insurance companies have not been shy about telling the legislature this. And in fact, over the last 5 years, insurance companies have lost $5 billion in Florida alone. So the legislature, as you know, last December had a special session. Bill was dropped on December 9th. It was signed by the governor 7 days later on the 16th.
That's quick.
It was very, very quick. In fact, I was in Orlando at a conference, an insurance conference, when it dropped on Friday. I spent Friday night, the conference went over. I spent Friday night in my room reading this bill.
You're a fun guy.
Loads of fun, right? Let's look at an insurance bill.
Uh-huh.
So anyway, that was really historic legislation. It did a lot of stuff. It repealed one-way attorney fees and assignment of benefits. So it moves a lot of chips over in favor of insurance companies. You can still sue an insurance company, but it's not incentivized in the way it was before. So you can't get attorney fees from the insurance company anymore, right?
Okay.
So that was actually not fairly, but hugely historic. And 4 years ago, no one really in Tallahassee thought that was even possible. Like if you said, I'm going to repeal one-way attorney fees, you would be laughed out of the room.
Right.
Well,
a lot of the legislators
trying since 2017. I mean, we literally have been there since 2017 trying to get that, and people were like, yeah, no, that's not happening. I mean,
a lot of the legislators are attorneys. They're like, well, no, we're not going to go down that road.
Aspirations are not,
Yeah.
Right.
Okay.
Right. And they have a balancing act. And, I don't think the legislature ever thought it would tip this far.
Right.
Right. And it really got out of hand, which we can discuss later. So anyway, they did this. And now it's not fully effective until December, right? Because we still have policies in place from last December. So we are, 8 months into a bill that's not fully effective, right?
So is that why we haven't seen our insurance rates drop yet?
Yes. What the legislature hopes is going to happen has not reached a policyholder in their deck page yet.
Okay.
Right? But I'll share with you some of the things that are happening that are sort of little green shoots that are positive that, agents, customers, clients don't see, but is happening. And we were hoping they were going to happen, and they are. But again, Chris and Cyndee don't see it, and their customers and clients don't see it. Okay. So, number one is the insurance industry, insurance and reinsurance capital, right? Money, capital have lost faith in Florida, right? So they're out. And, what you can see is, insurance, typically, we say affordable and available, right? It's not affordable, it's not available, and it's not reliable, right? Because companies are going insolvent.
right.
So insurance capital is fleeing Florida and going elsewhere because there's plenty of other things to insure.
Right.
And that's Florida.
Where they don't have such a huge risk.
Correct. And so the Florida companies are really, I mean, your availability is not great. The prices are high. Reinsurance, that's Bermuda, Zurich, London, they're looking at the world. So they got other places to go, and they have. So the bill is bringing back insurance capital. In just, 4 days ago at the public policy meeting, right? We heard from the insurance commissioner.
Yeah.
2 new companies are coming to Florida, right? 2
Great
companies.
news.
Weren't here before. They're here.
Okay.
He said that this week he thinks there's going to be a third that he'll be announcing. And there's others like lining up on final approach, right, that are going to come to Florida.
Okay.
So capital is now interested in coming back to Florida. It wasn't a year ago, right? That's one thing.
So do you think that's directly tied to the limitations or the end of the assignment of benefit claims and the one-way attorney fees?
Yeah, 100%.
Okay, good.
And it makes sense that the new people coming in don't have the burden of all those lawsuits. So
Right.
kind of like now, it's not that we're not a good market because we're the highest cost ones too. It's just that now you don't have the burden of all this excess lawsuits that were taking profit away. Right?
Okay, that makes sense.
Arguably, they have a competitive advantage
Correct.
over someone. If you've been in business for the last 5 years and just hemorrhaged, dollars, all of a sudden a new person comes in and they don't have
They don't have
that
to carry
tail
that
of the
weight.
comments.
Okay.
They're here with a fresh slate.
Right.
And again, they're still subject to lawsuits, but they're not having to pay, $135,000 for a roof, with $100,000 of that being attorney fees.
Right. Oh, it's so crazy.
Yeah, right. Exactly. So that's thing one. Thing two is citizens depopulation, right? That's the insurer of last resort. Well, it's supposed to be. It's not anymore. It's the largest insurer in Florida.
Right.
It's at roughly 1.3 million policies, projected to have 1.7 by the end of the year. So right now,
And that's never what that was meant to be.
no. Insurer of last resort for the highest rates in Florida. So that's a whole nother story. But in 2007 to 10, the legislature froze citizens rates. That's in response to the 04, 05 storms, right? The voluntary market raced ahead, and they have to be actuarially sound.
Right.
But the legislature froze citizens rates 3 years, and then after that, they said, okay, we'll unfreeze them, but we're going to cap the rate increases at 10% a year. So citizens kind of just chugged along, but they quickly did not become the insurer of last resort.
Right.
So it's huge right now, and that everybody is sort of the backstop, right, for citizens, even if you're not in citizens.
But isn't one good thing right now that these new people are coming in, and if the policies are within 20% of citizens, which it's easier now,
Right.
then we can get people out of citizens to another policy that we expect to be around, right? Not
So-
its last leg. So
As
that's
part of the depopulation, which now there's 8 companies who have agreed to take out 350,000 policies. Okay. Citizens is still growing, but a year ago, no one was taking policies out of Citizens, and Citizens is growing 5,000 to 7,000 policies a week.
Okay.
Right now, you have companies saying, "Okay, I'll take that risk." Right. So there's a depop. But what Cyndee's referring to is, if they make an offer, if their premium is within 120% of the premium someone in Citizens is paying, Citizen policyholders in Citizens are paying, they have to go out.
Okay.
A year ago, they could choose. Well, I'll go out with Chris, or no, I'm going to stay in Citizens.
Right.
Now they have to go out.
So even if their policy is 20% higher than what it is with Citizens, they are going to be forced out of Citizens and forced to go to a different insurer.
A private insurer.
Okay.
So, and remember, like Citizens right now, or statewide, is 40% below actuarially sound.
Wow.
Right? Again, if they were
Not a
a
good place to
private
be.
insurer, they would yank their card.
Right.
Right? Private insurers have to be solvent. They have to be actuarially sound.
Right.
And if they fall behind, boom, they're gone.
And isn't their rate still substantially like 56% less than competitors? Like
Yes.
that's not, I mean,
Right.
so
Yeah.
not only is it actually not sound, but was it intended to be cheaper? Because
Right.
basically we all became shareholders that we didn't really agree to.
Right. Exactly.
Right. It's in Tallahassee, I'm not in Citizens, and I mean I repeat, people are in Citizens, but if there are a couple of cat claims and Citizens runs out of claims paying ability, then all lines of insurance across Florida, property, motorcycle, boat, all lines of insurance except medical mal and workers' comp are assessed to make up that difference.
Okay.
So that's why, I mean, the policyholders, policymakers really want people out of Citizens. It should have the highest rates in Florida. That's another story.
For another day.
Yes, exactly.
Okay.
But anyway, let me just say that for true insurance reform, you have to get there. We're not there yet, but Citizens is beginning to depopulate.
Okay.
That's a positive that people don't see at the street level, right? No one goes, oh, Citizens is depopulating. That's so wonderful.
Right.
They don't see it.
No.
Right? And
Right.
they may not want to leave Citizens.
They don't.
Right, exactly.
So you said we're not there yet. What is the answer? Do you have the answer? Do you have an idea of where we need to get to and how we could get there in order for these insurance rates to start to come down? One thing, that's one question, but another thing that I wanted to touch on, I had just heard at an event, we had one of the representatives was talking about reinsurance, and that's something that you just mentioned.
Yeah.
And there's a certain threshold to be able to tap into that reinsurance, which is why I had heard that is why some of our policies are so extraordinarily expensive, is because we can't tap into that reinsurance market.
So that's actually, I've told you two of the things that are positively happening. There's two more.
Okay,
One is reinsurance.
Okay, good.
It's a great question. So, reinsurance, when you purchase insurance from a Florida domestic insurance company, they turn around and buy reinsurance from Bermuda, Zurich, London.
Okay.
That reinsurance can be 40% of your insurance bill.
Right.
It is a complete pass-through. Your insurance company doesn't keep it. You have to pay it, but off it goes to Bermuda.
Gotcha.
Right. And prior to last year's bill, the reinsurance industry is like, well, we're going to go cover earthquakes in California because that's less of a risk.
Okay.
Right? So they're going out for risk elsewhere. But now, again, the reinsurance capacity is coming back. Everybody who needed reinsurance earlier this year was able to get it, which is a huge change. Last year, remember, Citizens, they buy reinsurance. Last year, they were not able to purchase the reinsurance they wanted.
Well, and to give you an idea, even it's not just Florida on that aspect, but there's not a great appetite for climate financial risk, weather events. So even FEMA for the NFIP, they buy reinsurance. Right. Last year, they could only buy half as much. So the market didn't have an appetite for the full amount we had the year before, and it cost twice as much, which really translates into a 4 times increase. Okay. Now, we did not pass that rate on. So, I mean, again, you can see some of the things that go on behind the scenes, but the pressure, but I will tell you, because I spoke at the reinsurance conference that Gallagher had in Orlando this year, and basically they said the same thing Trey did, which is we can sort of model and talk about weather and climate events, but until you get the fraud and the lawsuits out,
right,
we can't be part of that anymore. So that was, they're like, okay, let me step back on that. We've got these other issues. And so that's, I think, also part of what's helping them feel somewhat coming back to us.
So the numbers that they're working with right now are not true numbers and accurate numbers, because you're dealing with all these fraudulent claims and all that crap that was happening before.
Right.
And now that we can get rid of all that stuff, now they're going to take a real look at assessing what type of financial risk that they have to insure homes in Florida.
And I have news people from different publications because of NAR reach out to me all the time and want to say, well, Florida's problem with insurance is because of climate financial risk. I'm like, we don't even know what that is yet. Like, seriously, that is not, we may, a year or two down the road, we might be talking about something different. But no, we've created our own man-made problem. Unfortunately, it was really bad timing.
Yeah, right.
and we've just been trying to make people not amplify something that's not real, because it could scare people away, right? Like, oh, it's climate financial risk. No, it was lawsuits and problems. There is uninsured risk in the rain and precipitation area, but again, that's a whole different matter.
Okay. And when we're talking about, and this is a common misconception amongst a lot of people, when we're talking about flood insurance, we are not, it's the rain that comes from the sky that causes the flood is completely different from the water that rises up that's causing the flood. And those are two totally different things. One, flood insurance is going to cover, the other one, flood insurance is not going to cover.
Not true.
Not true.
Not true.
Well, then you tell me about it.
Yeah, if it rains, any rising water, whether it's precipitation that rises up, so you have rain like we saw in Orlando, Volusia County, all that after Ian, or what you saw in Cape Coral, all of that is flood. So The only time really that water tends to, they actually get into arguments, but say the roof goes and water comes in the top because it wasn't rising water.
That's
right?
what it was that I was thinking of. Yeah.
And
Rain coming in from the roof.
One of the challenges is because, again, the federal, the NFIP is here, so they always want the government to pay first, and local insurers try to pay. There's always this give and take on underwriting with that stuff.
So if a pipe bursts in your house and your house ends up being flooded, your flood insurance is not covering that. It's a different, that's your homeowner's policy that's going to cover something like that.
Right. But property insurance does not cover flood.
Right.
And
Everybody thinks it does.
Right.
Oh, I got water. I'm going to plow it.
Right.
Yeah. No.
So you had said there's 4 things. What's the fourth?
So that's 3. We've done 3.
Yep.
Capital, depop, reinsurance. Okay. Thing 4 is litigation. Right. That's what's driving all of this. We don't have all the facts and figures from all the insurance companies, but we do know this. Citizens, the lawsuits against Citizens year over year, first calendar quarter, 22, 23, right, is down 20% this year. Right. So the bill became effective December. So 22, right, you had this number of lawsuits before the bill. After the bill, the very first calendar quarter of 23, it's down 20%, right? So you can see that's thing 4. You can see these are things that we hope would happen.
Right.
They are happening. The trend line is good.
Yep.
Okay, but where's it headed?
Yeah.
Right? That we don't know. But right now, it's like, okay, the things that the legislature could do, they did do. And so, to your agents and brokers around Florida, the customers and their clients, we're turning the Queen Mary 100 miles out to sea, right? From your porthole,
right.
It looks pretty similar.
Yeah.
But these are the things that need to happen and are happening.
Okay.
And I think at least.
So this is positive news. I thought you were going to scare us, Trey.
Wait, stick around.
Well, and I think at least in my world as a realtor, I'm feeling like we're stopping the bleeding. We're stabilizing. At least we can know sort of what to count on. Before we redid the flood, I would tell people every day, like, I saw bigger waters. I saw this huge from $1,400 to $14,000 increase, and nobody can plan for that. And I think in the insurance world, in the property insurance, I think we keep saying 100, 200, all these increases. Like, how can people plan for that? So if we can just stem the tide, then we can make a plan. Then we can figure out, and then what can we do to maybe mitigate or get discounts or improve with hardening our homes or other things. But at least for me, it keeps going so far that people are calling me saying, I don't know how I'm going to stay in my house. I mean, it's, again, how long can we go with other stuff? So they did a good job in spending that time.
Or we have people that have found fantastic jobs and they want to relocate to Florida, or they've gone abroad for school or whatever the case may be, and now they're coming home to Florida. They can't purchase anything because the insurance rates are so high that it knocks them out of their qualification and affordability for the mortgage.
Yeah,
correct. There's a lot of pressure points. You guys know that well.
Yeah.
And interest rates, home prices.
Yep.
And then insurance and taxes. The sale triggers a reassessment. Taxes and insurance, you don't amortize, right? So it's a difficult.
Yeah, we already had an affordability problem, and then here comes the thorn in our side of property insurance that made our already unaffordable, housing conditions even more unaffordable because now we've got these crazy high insurance rates. So it's positive news to know that something is being done and we actually have the wheels in motion. It's just how long is it going to take for it to come to fruition?
I think one of the things that we all have to think a little differently as realtors and help our clients think is, I think many people haven't thought of insurance in the total housing affordability formula. Mm-hmm. And yet you look at it, our mortgages are typically a fixed interest rate. Our property taxes, if it's your, the 3% in Florida is fixed.
Save our homes.
You can count on those to save our homes. Thank you. Yep. So it's the insurance that's the wild card. And again, as we look at different things, that's really been the challenge. And so, I think that's one of the things that we have to be just aware of is that aspect of it that maybe we didn't before.
I think you mentioned the key word is stabilize. And that's what the legislature is trying to do now is like stabilize things, right? Because right now it's red hot.
Right. At least now you can budget.
Right. So they want to stabilize it, and then we'll kind of go from there. And, we are the number one hurricane risk in the world. So our rates right now are 3 times the national average.
Right.
Okay, we're going to be more expensive than the national average, right? Because of our hurricane risk. We shouldn't be 3 times the national average.
Right.
Right. And so that's what the legislature is attempting to do. And the market that our members see right now, it's not a reflection really that these reforms aren't working really. It's a reflection of by the time the legislature came out with these reforms, the market had capitulated almost, right? It was really on life support. And now we're kind of trying to stabilize things. Okay. And then we'll go from there.
And I think the benefit of stabilizing for me is that, how many times do we go to a seller and we say, what's your home? Like we're trying to make an offer. We're trying to figure out like, what's your homeowners? What's your flood? What's this? And if you can start to imagine that it's going to be similar, there's not a huge surprise, then you can make offers that tend to get through. You can put people in houses. One of the questions I keep having is when we're putting people from the Live Local Act and the hometown, they're doing everything right. And then they get that first renewal, where do you make up 100%? Like what part of our economy works on a 100% increase annually?
Right.
Nobody.
Nothing.
At one point we looked at that with healthcare. It's like, it's just not workable. And so I think if we're
not sustainable,
we can end up having people, both when we're counseling them, understand and be prepared, and also for home ownership, think, okay, if I well maintain this home, I should expect about this. Do things go up 10%, 20, again, in the flood insurance arena for a primary, it goes up 18%. For 2 years now, we've not had one person tell us they've lost a deal, lost a home, had a consumer complaint. So again, there's a threshold in there. I think a lot of things have gone up, but it's not going to be nothing. Everything is still going up, but it's, again, what is that manageable amount?
Right. Okay. Mm-hmm. So let's talk about NFIP.
Let's talk about it.
Tell me what you know. 5th grade level, so everybody can understand.
Yeah, me too. Otherwise, you'll lose me.
So bad. Okay. So in 2012, Congress passed a law, retroactive, called Bigger Waters. And I will never forget, I had a veteran who had bought a house in that 6-month period that went back, and his flood insurance went from $1,400 a year to $14,000. And he basically looked at me and said, "You've just foreclosed on me. Like, I didn't do anything wrong." And that is why I think I'm so passionate about our Live Local people, because I feel like some of we're setting some people up for failure, and I don't want that. I want us to try to be proactive.
Yeah, totally.
So NAR worked for 10 years with FEMA, partnering, saying, hey, we've got to have obviously actuarially sound rates, but we also have to not put people under in the process. We have to not have people lose their homes.
Right.
And there was a lot of work, and a couple of things that were important, as we said, there has to be a cap. Now, one of the things that has just really come to light lately in actually how it works is we've always said that the most anybody in the U.S. would pay is $12,125. That sounds like a lot, but there were literally people paying $45,000 for a $250,000 coverage, literally, before this went on, and no way did cite.
Bigger Waters.
Yeah, right. under the old system, right. The legacy system. So, but what's really important for your realtors to know is that with this, we got a cap that says, and I'm going to just use my house. I'm a 5th grader. Let me tell you about my house, because I said, okay, we can't tell people's information. So I said, okay, do mine, and I can tell my own information.
Right. Exactly.
So I have a house at 1,700 square feet on the Intercoastal, a mile from the beach, and slab on grade. So I'm not elevated.
Okay.
So
this is sounding like my house.
So
please don't scare me.
I know. So the true actuarial rate under Risk Rating 2.0 would be $27 per thousand of coverage. Okay. And so we got like $250,000 worth of coverage. It comes out around $3,800. I'm sorry, $6,800. If I elevated my house 10 feet, I would pay $16 per thousand. So that's a big jump. Almost $9 difference, right? Okay. So you can see that savings. However, what NAR negotiated with FEMA is that barrier islands in Florida, their max is $15 per thousand. So when some people say, like, why is slab on grade and elevated seeing the same rate? Right. We're both saving at different levels.
Okay.
And so that number came down to make that affordable. And though it's more than many people were doing when we only looked at 2 pieces of data in an antiquated system, what Risk Rating 2.0 has done is it's actuarially accurate down to every single property.
Okay.
there'll be some reasons why that's important when we talk about what Citizens is doing with flood insurance and what to expect. But anyway, that was a really big deal. So basically for myself, I'm saving $3,000 a year based on the cap NAR negotiated for me. And you're probably saving it too. You just didn't realize.
And people ask all the time, what does NAR do for me?
Right, exactly.
Right. There you go, people. There you go.
There you go. We got your dues covered. $3,000 a year. How many dues does that cover for our local,
20.
national? Exactly. So, so the other good thing that we negotiated was that it only go up 18% a year if it's your primary. That means you're in it longer than 9 months a year. And then if it's not, if it's secondary, it can go up 25%.
Okay.
The other really
But that's every year.
every year, up until you're at the true actuarial rate. So what we did was we said, okay, if you lived in your house before October 2021, your flood policy might have been $1,200. I bought my house last year. She didn't have flood, so I was looking at $6,800, right?
Okay.
So they said, well, Chris, we can't have you go that same guy like that veteran, $1,200, and say you got $6,800. So that's how the glide path is the increase. If you're already at the full rate, it doesn't go up like that every year. So you are at that rate.
Right.
But not only did we protect people so that there was a smooth way to get to that eventual number, we let you protect that and help that home be transitioned to a new buyer and let them maintain that rate.
Okay.
So-
Let's talk a little bit more about that, because we talked just before we jumped onto the podcast, and one was in regards to if you had a cash buyer.
Yep.
Because if you've got a mortgage, that policy kicks in on the day of closing.
Right.
If you've got a cash buyer, that is not the
It's a
case.
30-day wait.
30-day wait.
So here's a little tip for your listeners is whatever you do, if somebody has a flood policy, as the realtor, I always in my contract write that I want a copy of the deck page.
Right.
Because with that information, my insurance agent, whoever my clients are using, can maintain the rate and write whatever they need.
Okay.
So on a normal mortgage, that's easy. You do all the things we do. It starts on day one. But when you have a cash buyer, even though they get the savings on the rate, there's a 30-day gap. So the way that you can get around that, and if you're working with a cash buyer, you want to think ahead, is I write into my offer that the seller will allow us to assume their policy and will compensate them for what's left. So if 6 months of the policy was left, then the cash buyer would say, I'll compensate the seller for that 6 months, but they will let me assume it. And so it's a literal assumption. So there is no gap.
Are all insurance policies assumable?
Well, again, we fixed in risk rating 2.0 that you don't have to assume. You assume the rate.
Okay.
And so you start with a full year with your insurance person.
Gotcha.
But for a cash buyer, it's the one instance you want to think ahead and you want to understand that you are actually taking money from the seller. They don't get a refund when they close it because you're taking it. So I just find it's better to negotiate that we're going to pay you for that because my buyer wants coverage, especially in hurricane season.
Of course. Yeah. If you're closing in September, October, you want to make sure that you got a policy that's going to be in place.
Now, one crazy thing that happened to me last year was I had the policy. I always ask for the deck page and I always put it in my file. And I had clients that paid cash and they're like, we're self-insuring. We don't need anything. I'm like, okay.
Which is very common.
Right. 4 months later, they called and they said, we're getting divorced. I need you to sell the house. So the rate that was available for them when they bought it was $1,200 for a year of flood. The new full rate under NFIP risk rating 2.0 was like $5,800 a year.
Wow.
So again, when you're looking at interest rates are up, everything's tough.
Yep.
So one of the things people may not know is if you as their realtor are holding on to that, for 1 year, you can reinstitute that rate. So you can get that rate back for them. So we were able to do some things to get that rate back for them. And so we were able to sell the house with a $1,200 policy versus getting that person on a new path to $5,800, which again, we're talking total cost of ownership. Right. Every bit matters.
And who looks like the rock star when that happens?
Your realtors do. Yeah.
Yes, absolutely.
Yeah.
Okay, fantastic. Let's talk about best practices. Well, we just went through best practices when you've got an existing flood policy, but let's talk about the My Safe Florida Home program for homeowners. Tell us about that and what you know, because a lot of people don't know. We're talking about the 50% rule and all those sort of things. So let's get to a condensed version of that.
Well, you know, Trey and his team have done a great job trying to, like you say, get to stabilize. But what I'm loving is being able to have conversations with people about the My Safe Florida Homes, which is that the state will grant $10,000, $2 for every one, up to $10,000. So You can do different hardening improvements from roof, windows, doors. But the thing that people need to keep in mind that maybe, again, if you're working with people, just let them know, if you're in a special flood hazard area, like I assume you and I are, you don't want to do your windows and doors and then find out your insurance company told you have to do a roof and you don't have 50% the amount to get the permit because the city says you've over improved.
Right.
So there's some strategies to just be aware and to let people know, hey, think about it. Now maybe you have enough capacity that doesn't matter, you could do it all. But a lot of our older, smaller homes have a very limited amount they can do in any given time.
Right.
And one of the things that I've just recently myself found out, and I don't know how many of your people know, but every municipality, city, county, whatever, makes up what's called a look-back period so they can help get some of this community rating system discount.
Okay.
Prior to
you guys that are listening, when she talks about community rating system, you'll see that on your deck page that'll say CRS.
Yeah, right.
discount, CRS
Yeah,
discount.
CRS discount.
So prior to risk rating 2.0, different counties would work on these points and they would be in a 15%, 20, 30. So if I was paying $2,000 and I was at a 20%, I'd see a $600 discount.
Okay.
So I just told you that I pay like $5,400 and I get $11 CRS discount. So you're like, well, what the heck? I'm pretty good at math, but I don't think that's 15%.
Right.
So what happens is because I told you we had that cap on what we were going to pay, it negates any other savings. So if you want to pay the $16 and get the cap, and pay more than $15, they'd let you, but FEMA gives you the lowest possible amount. So now what we're talking with is some of these places like St. Pete Beach has a 5-year look back. So imagine you're somebody who bought a home and it's been all renovated and you think it looks great and you're excited. And then the insurance company says, you need a new roof. And they're like, you don't have any capacity. So, most of us, it's hard to even find the information, but also be aware of that as you're looking and then help the consumer go, we want to be the source of the source. We don't want to be the one, really in that. So we're working with some of our legislators right now for Tallahassee next year to consider trying to get that down to 1 or 0, just because in that case, the longer the period, the less resilient those communities are. And the dollar value benefit they were getting before is gone. But a lot of the floodplain managers, we've got to educate them because they don't really realize that was gone. So we have this long punitive. And the reason I tell you about it is because when Hurricane Ian hit for Cape Coral and Lee County had a 5-year look back and Charlotte County didn't. And so the ability for those people to be resilient was greatly diminished. Mm-hmm. And FEMA said, well, you made a deal. You can't change it midstream. Now we're working it through and they've just passed some stuff. But those are the kind of things that, again, just to be aware as we're out there working with people. And hopefully, as we get legislation, help us rally it next year in Tallahassee of why it matters, right?
Absolutely. Mm-hmm. Yeah, we want as many voices so we could all speak with one loud voice when we go to the guard in Tallahassee.
Yeah.
We are loud.
Yeah, we're quite loud.
And I want to circle back to My Safe Florida Homes for just a second.
Yeah, go for it. Please do.
From a big picture, just make sure everybody understands the eligibility. So it's homes and townhomes with an insured value of $700,000. So
is it 700,000
or less?
Or less, right? But it's not. That's the home, like the replacement cost, $700,000, not the property.
Understood.
Right. So $700,000.
So we're not talking about sale price. We're talking about whatever's in your insurance document.
Structure.
Okay. Right. Because we don't insure the land. Right. We're only insure the home.
Right.
And then secondly, when they first rolled it out, it was just homes in the windborne debris region, which is largely the coastal areas.
Okay.
But now it's statewide.
Yes.
So most of the people listening to
that's
this
a win.
are in the windborne debris region. But even if you're in the interior of the state, they're still eligible for it.
Sure.
Okay.
Yeah. So it's a good program.
Is there any homeowner age restriction? Is this like
yes.
It's put in place?
It had to be 15 years or older.
Okay.
They're really trying to.
So the home has to be
mitigate.
15 years or older. But I'm talking about the age of the homeowner.
No.
Because I know there's another program that helps out people that are over 55 or 60 years old.
No, and here's what they did. Of the $125 million, $25 million of it was just to have to do like a 4-point on steroids. And so actually David Bennett had his done, and they said, you need to take us to your insurance because there are discounts you're not getting because they actually count each nail. Like it's crazy. But it is, to the consumer, it is a free inspection. They funded that. Then it tells you what you qualify for. And you could choose all or none. So let's just say you looked at it and you could have got a new roof, but you say, well, I have money to do a new garage door. You don't have to do the roof. So again, that information's there. You pay for the whole repair. So if it's a $3,000 garage door, you pay for it. They give you back the $2,000 after they inspect that it was really done. So an inspector comes back, confirms. But it's a great program.
So it is a maximum of $2,000, or what was the
10,000.
to maximum of $10,000 per
or
home?
$2 per every one you spend. So if you do a cheaper repair, then they could do 2 for every one.
Gotcha.
Yeah.
And people tend to think, oh, I'm doing it for a discount, but really you're hardening your home and make it more resilient, right? So
But if you want a brand new roof, they'll give you $10,000 towards your brand new roof. And does that money have to be paid back?
No. And I think that that's the real thing is help your consumers, your neighbors understand, like, talk to your insurance agent. If I do this roof, what would it save, right? And you may find, so while we're talking about things are stabilized, we still all know newer roofs are the bee's knees. That's what everybody wants.
Yeah, they are. The bee's knees. Yeah, the cat's meow.
So they can get more information. It's at mysafefl.com.
Homes.com. Yeah, homes.com.
So take a look.
Fantastic. Share that information with your friends. Share this whole podcast with your friends, because everybody asks us as realtors, and our realtor colleagues keep asking us about insurance. I'm trying to give you guys all of the insurance information that we could possibly give you in a short amount of time. So pass it along. Make sure that everybody's listening to it. And you had said the people down here in this area, but this is actually national. We've got people from all over the country that are listening to this. That My Safe Florida Home program might not be able to help them if they're in a different state, but certainly this information is going to get people's wheels spinning so that they could talk to their the government affairs directors, their elected officials, to try and get some change happening all over the country.
It is for primary homeowners.
Correct.
So if we didn't say that, you
did say primary. Yep.
Yep. Mhm. And also on the website, they have a whole section already in Spanish. So for people where
Beautiful.
Spanish is a more comfortable language than primary, it's already there to get them all with that.
Awesome. So you had talked about flood insurance. It was so funny. I was like shooting myself in the foot because we talked about this a couple of years ago, and you said get the flood insurance now. I didn't get the flood insurance, Cyndee. I didn't listen to you, and I'm so upset with myself. So the city of Pompano Beach had sent out this flyer to every resident, and it said, "You live here. This is going to be in a flood zone, and your rates are going to be really high. But right now, you can be grandfathered in at this lower rate. So you should go and talk to your insurance provider." Never did it. Talked to the insurance people. I think it was like $400 to.
It was $400.
It was.
$400.
It was $400, and now my husband had called our insurance people, and it's substantially more than $400 now that all these things had changed. And people talk about the mapping. Why would a lot of people are not happy with the way that things are mapped. They feel like they've been mapped into areas where they do not belong. They've lived in the house for 50 years. They've never seen water standing in the street. We're never going to have a flood here. Why am I paying all this money for flood insurance? So you had some thoughts on the mapping system and why better mapping isn't the solution to having cheaper flood insurance.
So we often hear people talk about better mapping. And what is really opened my eyes is that mapping is a political process to determine who must have flood insurance and then who is limited in what they can do to repair their home. Okay. But if you look at what happened in Hurricane Sandy, where that whole area was flooded, prior to Sandy flooding, it had this really small outline in blue where people were in the special flood hazard area. Then the whole thing, like a peninsula, like Pinellas County, got covered in blue. And so then they said, well, we're going to map. They need better mapping. So then they mapped, and the map went all over the peninsula in blue.
Right.
And New York City said, we don't like that map. Our map's going to look like this. And so First Street Foundation, and you might find them on Realtor.com, and a lot of people are asking, they have that flood factor, but they're using high-level technology to really do CAP modeling.
Is that the LiDAR mapping?
And it's a lot of things, but they have a lot of sources. But if you go out there and you see you're a 6, 7, 8, 9 on that, even if you're in an X zone, you are a high risk, so you look at what happened in Orlando and Osceola County and all of that, and they would say, I'm not on the coast, but what people don't understand is FEMA has only mapped 1/3 of the coastline, and there's a whole bunch of areas not mapped. But the problem is, you look at New York City, it's not a science problem, it's a politics problem.
Right.
And so,
Shocked.
So do they? Do they do that as in the federal government is trying to basically minimize their risk on the amount of money that FEMA is paying out? Is that what you mean by political mapping?
No. So what happens is once FEMA, because they actually go by on foot in the water and they are the most extreme mappers, like almost like with a little
with a little measuring stick and
100%. No, I mean, so the problem is that once a map gets done, it comes to the legal jurisdiction to approve the map and accept the map.
Okay.
And what happens is when you accept that map and you go from being in an X area to a special flood hazard area, you now not only have mandatory purchase, which again, I'm less upset about than the ability to not maintain your home. You have this 50% rule that you're constantly battling to have to potentially bring your house up to current codes. So
their constituents are telling them,
correct.
No, you are not doing this.
Exactly.
And listen, let's go right into that.
Now the truth comes out.
I think citizens may be modeling the future of the United States. We have a climate financial work group at NAR because the current president told Fannie and Freddie and FHFA to underwrite for climate financial risk. And I was like, what is that? I want to know because somehow I feel like it's not going to be good news for Florida.
Right. Yeah.
So I was like, let me work for Florida up here. Let me figure this out.
Thank you.
And you're welcome. And so right now, again, I don't know what the future of climate financial risk, I don't know what'll be in that basket, but I can tell you right now, First Street Foundation showed me 2 maps that changed woo. Right now we have 5 million policies in special flood hazard areas in the U.S. They have a map that shows at least 10 million more homes that should be in a special flood hazard area for precipitation and rain, but we don't measure that. So you look at Harvey, you look at Orlando, you look at Osceola, you look at all the places this stuff happens. So they do have a contract with NOAA that in 10 years and, when our grandchildren are born, I don't know, somebody will figure it out. They're getting down the path. But the reality is when they say climate financial risk, there is an exposure because all these homes, and that's why you hear that 40% of the claims are in non-special flood hazard areas.
Right.
Well, 2/3 of it is rain and precipitation we're not addressing.
Right. Okay.
So what citizens did by saying, just have the flood insurance, and I think over time, if we move to something similar to that, it would also be a more balanced fund because insurance wouldn't just be for the highest risk. You'd have it across and you don't necessarily know. But what I would say to people about that is I would every day and Sunday want to pay flood insurance rather than have to be under the 50% rule.
Okay.
And I just learned, again, asking people in Cape Coral, what really happened when you tried to rebuild? And they said, okay, a roof where you live costs $12,000 right now to put on your house, but they tripled the prices here, so that's $36,000, and that counts against me. So I'm almost losing before I even start because prices after an event go skyrocket. And so it's funny because if you ever go get a permit and it's low, they tell you, well, we have an industry price. So that $10,000 roof is really $12,000 because we know the price. But when it's over, they don't make that adjustment back. So I would like to work to see if there's not something we can do in that arena because it just doesn't make sense. That's going to be inflation. It's not real. So anyway.
Well, when you said what citizens did, tell them what citizens did.
Oh,
right.
Citizens going forward requires that every policy would have flood insurance. And so again, they're covering their financial risk. And so on new policies, you'll see it today, and then it phases in over time.
Okay.
And probably the thing for people to know, and again, a good conversation to be on the front of with your clients, is that of the 1.2 million citizens policies when the law was passed, only 300,000 of those were in a special flood hazard area. So 900 of your family, friends, and neighbors have flood insurance coming their way in the next couple of years.
Oh, okay.
And so like you, if they didn't get it ahead of time, the actual rate today is higher than it was. And so again, it will impact
about 4 times higher.
Yeah.
Yeah. So,
But it is what it is.
yeah. And so over the next 4 years, every person in Citizens, every policyholder will have to have flood insurance.
Okay.
4 years.
So you better start buying that now before the rates go up even higher. If you know that it's coming down the pike and you're going to have to add it to your policy, well, should those people be buying flood insurance today as opposed to waiting for it to be mandatory?
So we haven't seen flood insurance change, not saying it won't, right?
Okay.
Like everything else. it just makes good safety sense. We live on a peninsula, and I live on a peninsula. So, and it rains.
Right.
So, I mean, it's smart for your own health and safety.
Right.
But
Well, we just had the 1,000-year flood down here in Fort Lauderdale, right by the airport.
I flew into that airport.
I couldn't believe that I was looking at the radar.
see Dodger
'cause
Stadium?
No.
It's all underwater.
Oh, from Hillary?
Oh, really?
The whole thing underwater. People are like, it can't happen here. It's like, that's the thing. It can happen anywhere. Where it
Wow.
can rain, it can flood.
Yeah, you'd never think that would happen in California. Okay, we are. I've kept you guys here for a while. I hope everybody has had fantastic information out of y'all. But I do ask one question at the end of every one of these podcasts. So before I let you get back to work, I'm going to ask you guys this one last question. And this is for both of you. What is a little Florida gem that you know of that we all need to hear about? Trey, I know you're up in Tallahassee most of the time. Cyndee, you're out there on your little peninsula, Could be anywhere. Could be your favorite spot in Orlando when you go to convention, or favorite spot in Tallahassee, or your favorite beach, favorite park, favorite restaurant.
Oh, boy.
What do you love about living in Florida?
You go first.
I've lived all over Florida, and actually I have a ton of gems, and a lot of them are in North Florida. So I'm hesitant to say because we don't like the crowds,
Yeah, right.
Where we go to the beach is called the Forgotten Coast.
Yeah, right.
So, one of those gems is, I'll just say, is St. George Island. Right?
Okay.
It's a little island there's a deal cut a long time ago. Person owned the property, the land, and they got a bridge from the state of Florida in return for a state park. So the state got a park, right? And the person got a bridge. So now it's actually a barrier island that's developed, which you probably couldn't do today.
Wow.
Right? But the state park, I can go there in August. Yeah, there's a beach. It's a gorgeous beach. I can go there in August, and there won't be a person within, 600 yards.
Wow.
So try that.
That's a gem.
Down here.
All right, guys, leave Trey alone. Don't go to his beach.
He's a good
Now,
one, right?
yeah, now that you know it's there, but save it for a real special occasion. Don't go crowding his beach up. Okay, Cyndee, what about you?
So on Clearwater Beach, I used to live on the north end of Clearwater Beach, and if you head out and head right and go as far as you can, Caldesi Island, which used to be independent, but a storm brought the sand through, so you can walk all the way and find a lot of wildlife and nature, and sand dollars and other stuff that's just pristine. And again, nobody can get there except walking a long way down the beach. So
Oh, wow. Okay.
we'll do the Forgotten Coast. I know.
Okay.
You motivated me. So
Fabulous.
yeah.
Okay. Well, thank you so much for sharing all of that wealth of knowledge with us. I hope that people share this far and wide. Cyndee, good luck in all your future endeavors. Please keep doing what you're doing for us up at NAR. Obviously, this is a passion of yours. You know so much about this. I don't think you're going to be going anywhere anytime soon. So, we are in great hands with Cyndee and Trey. Thank you so much for all that you do. You're absolutely wonderful with all of your advocacy efforts for us.
Thank you.
Thank you so much for everything.
Sure.
Okay.
All good.
We will see you guys right back here next time on RWorldTalk.